Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1555A, and today's date is April 27th, 2018, and the title of the episode is The Plan to Bring Down the Economy and Blame It on the Central Bank. Let's get into the economic collapse financial news. Now, we are starting to see the dominoes fall, and it's going to go from country to country to country. Out in Ireland right now, retail sales, they have posted the sharpest decline in 7 months. Retail volumes in March were 2.8% below the same month last year. In the UK, growth has collapsed to just 0.1% in the first quarter of 2018, and it is well down on the 0.4% expansion at the end of 2017. This is the weakest quarterly growth rate record since 2012. And we can see here in the United States that confidence has dipped because people are beginning to question the long drawn out expansion, and the people are saying something just doesn't feel right. Now, the CBO, they came out with their forecast, and they're saying that there's going to be another 10 years of continuous growth without a recession. And they're very positive and upbeat, saying, yeah, we're going to go another 10 years. There won't be any type of recession. We're just going to keep adding to the debt. Everything's going to be fine. Now, you know, when they come out with these reports, either it's the government or the central bank, it is always the opposite of what is really happening. Now, we need to look at what has been happening here, because we know there is a race to see who is going to control the narrative of the entire economic system when it completely breaks down. We discussed the narrative and how the central bankers had the narrative back in the 70s, where they blamed it on gold speculators. There was no oil. This is why we need to come off the gold standard. They controlled the narrative back then. They told you a story, they made it up, and they made everyone believe it on why this is all happening. In the background, which came out much, much later, we were moving on to the petrodollar system that has been in the works for a very long time. There were no gold speculators. Countries wanted their gold back because they realized that the United States broke their promise and they were creating a lot more currency than there was gold. And this was the real problem. And there was no shortage of oil. There was plenty of oil, but this was the transition period, so they had to blame it on something. So this brings us back to the narrative. Whoever controls the entire situation and whoever controls the economy coming down, they're going to control the narrative. Now, we know since the financial crisis, the Fed has kept the cost of borrowing money for banks at near 0% interest. That allowed all these banks to borrow money to buy their own stock. And many corporations did the same thing. You've heard of a lot of buybacks. They did this to inflate their value, but not, of course, the value of their services to the everyday person. When money is cheap because interest rates are low or near zero, the beneficiaries are those with the most direct access to it. That means, of course, that the biggest banks, members of the Fed, since its inception, get the largest chunk of fabricated money and pay the least amount of interest for it. The lower the cost of money, the easier it is for major companies to borrow it. Easy money means easy speculation for Wall Street and its main corporate clients, which sooner or later will be a threat to the rest of us. And we can see this in the stock market. We can see what's been going on since 2009. The Dow Jones Industrial Average, well, that increased by 24%. And we know this started in 2008, where they turn up the manipulation. We know the Fed has a trading desk. We know that other central banks have been buying the FANG stocks. We know the Fed has been creating currency like crazy with QE1, QE2, QE3, QE to infinity. We know they've been transferring the funds to other central banks where they took on the responsibility of pushing QE. And all of this has been done since 2008. And we know that most of these statistical numbers have been completely manipulated. Now, under Obama's reign, this was fantastic for everyone. The corporate media said this is great. Let them go. Let them do this. And since Trump took office, what has he really changed? Nothing. Actually, he has pushed everything to the extreme. So he's using what the Fed, what Obama, the deep state, what they've been doing before, and turned it up a notch. Now, why would he do this? Well, think about it. If you're in a car and you're revving the engine and you go to the red line, what happens? It blows. This is what he's trying to do. Now, if we look at what is happening here in 2018, we're a quarter way into 2018, and it shadows 2008. And we can see that there are things that are already emerging. Only 2 months ago, the Dow logged its worst single-day point decline in history before bouncing back. So what has been happening in the meantime? Well, the countries whose banks caused the last crisis, well, they have added more debt, they have gotten bigger, and the whole entire system is worse off, even though they're making it look like it isn't. The unemployment rate is significantly lower than it was at the height of the financial crisis, but for Main Street, growth hasn't been quite so apparent. About 1 in 5 U.S. jobs still pays a median income below the federal poverty line. Median household income is only up by 5.3% since 2008 and remains well below where it was in 1998. If you adjust for inflation, workforce participation remains nearly as low as it's ever been. Meanwhile, the top 1% of American earners saw their incomes go up by leaps and bounds since the Fed started manufacturing money, to more than 40 times that of the bottom 90%. Just as before, 2007-2008 financial crisis, there's a scary level of confidence among politicians, regulators, the corporate media, and the banking sector, and they believe everything is fantastic. Even the new Federal Reserve chair views the possible need for bailouts as a relic of bygone times. As he said at his confirmation hearing, generally speaking, I think the financial system is quite strong. When asked if there are any U.S. banks that are still too big to fail, he responded, I would say no to that. Now, when we look at the situation, we know that the banks have gotten larger. We know that they're insolvent. We know these stress tests are completely fake, phony, and false. The risks posed by the largest of the private banks still exist. Only now they're even bigger than they were back in 2007, 2008. And there's a lot more debt. There's a lot more corporate debt. There's a lot more public debt, global debt, and nothing has been repaired. Actually, they just placed a big Band-Aid on it and hope for the best. They created this illusion that we're in today. Now, the next time the crisis hits, we know that liquidity is going to die, banks are going to close their doors to the public, and all those people in Wall Street, corporations, they're all going to crawl back to the government. Except this time it's a little different. Trump is in office. We know that Andrew Jackson is hanging on his wall, which means that he's going to be going after the central bank. So Trump, at this point, has appointed members to the Fed who will only increase the danger of those risks that he saw in 2008. So basically, he's using everything that Obama did, everything the Fed put into place. He appointed members to the Fed board to continually push the same exact thing that was happening before and making this go to the red line. He's pushing the Fed to crash the economy. Everything that is happening right now is to push it to the edge. And when all these individuals come to government, the government at that time is going to have to make a decision. Because we were doing everything the Fed said. We were using all your policies. This is what you've been telling us to do. You're telling us the economy's strong. I mean, think about the argument here. And when all is said and done, we're going to have to say, okay, you told us to do this. You told us it was strong. It was okay to do all of this. What went wrong? Now the Fed is going to have to explain this. And there's going to be an investigation. Congress is going to scratch their head and say, yeah, what's going on here? Now, not every Congress member is going to join in on this, but the people are going to be screaming and yelling because when disasters hit you personally, especially in the pocketbook or the wallet, people take notice. People say, hey, what just happened here? Why did I lose my pension? Why did I lose my house? Why aren't there jobs? We've seen it in other countries. When the economy turns down, people get together and there's revolutions when things aren't going the way they want it to go. The same thing's going to happen here. And government, at that point, they're going to have to say, well, who's to blame? Who do we blame for all of this? Well, it was the Fed. They're in charge of this, right? Shouldn't we take a look at what they've been doing? Shouldn't we audit them? And we can see how this is all being set up. Now, all these setups that we're seeing, especially with the deep state and everything else, takes time. And everything has to be maneuvered in a certain way to get the response that you need to go after them. And what we're seeing right now is everything is being put into place, creating this plan. So when the system goes belly up, guess what? We have a place to point the finger. And that is what is happening right now, because we can see that there's no way that this system can go on forever. Because basically what's happening outside of the manipulation, everything is starting to break apart very, very slowly. And now it's accelerating. We're seeing it in other countries. The housing bubbles are popping. The Fed is raising the rates, pushing people out of the market. It's not going well for the real economy. Yes, for the stock market, which is manipulated. Yes, for the free money, for the banks, the corporations that are buying back their stocks. It gives the illusion that everything is going well, just like it gave the illusion back in 2008, where the subprime securities were AAA, where the corporations saying everything is fine, we're making a lot of money, we're hiring people. And then you find out with the snap of a finger, well, Lehman's dead, Bear Stearns is in trouble, AIG needs 2-3 bailouts, other companies, the auto industry. I mean, think about what happened there when everyone thought that everything was fine. We had economists on the corporate media telling you that everything was fine. We had the Fed telling us everything was fine until it wasn't. The same thing is going to happen now. And this is all being set up so we can go in and remove the Fed. So we are going to be going through this transition. The system is going to be reset, and a lot of people are going to be hurt. And as these people are screaming and yelling where they want justice, guess what? They can give it to them. They can say it was the Fed. Look what they've done. Let's audit them. Let's see what they've been doing over the years. And once that is done, it is game over. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.